We've got our buddy Chris Alfano here, 360 Mining. What's up, dude?
What's up, guys? Thanks for having me.
Your
Big time listener, big fan here.
Dude, we connected in Austin at TBC. We couldn't get you back to the casting couch at the
you missed
Airbnb.
out, man.
You weren't able to make it there.
Fair enough. Yeah.
And so it's a funny story. You were at Empower, but you checked in and then you literally left last year. And so now, this year you get to actually enjoy it.
Yes.
Congrats.
Yes. Thank you. It was a nice wave goodbye as I pulled in and immediately pulled back out to Dallas for a meeting. But I'm excited to be here this year. I'm honored to get the nod on the night before Empower. So
yeah, man,
pretty
you're
stoked.
starting off the marathon of episodes we're about to do.
We're doing a lot of episodes. So this is going to go out right after Empower probably. And so we are taking advantage of everybody being in town.
Right.
You know, as everybody's coming into town for Empower, just lining up as much podcast. So we've got our whiskey here, a little bit of Yellowstone. And we're recording for the next 5 hours, and this is one of three. So.
I want to see how much of that's left by the
Oh man, we're probably gonna. I'm gonna drink it all.
I guarantee it's gone. Is there another bottle? Yeah, there is another bottle. All right.
So, also really quickly, just thanks everybody for listening to the show. Like it's been really, really well received. A lot of great feedback. Lisa's episode did really well, went viral and stuff. But back to you, Chris. What do you guys do?
Yeah. So 360 Mining is a vertically integrated Bitcoin mining company. Really, it's kind of like a two-headed beast. So you think of vertical integration in Bitcoin mining, you think of like companies like Riot that, build their own facilities, maybe host their own miners, maybe own their own substation. But 360 really is vertically integrated down to where the energy originates. So we actually produce the energy all the way through the generation of electricity into mining Bitcoin. And so really what that looks like for us on one end is fully functioning upstream owner operator of natural gas wells, produce them just like any other oil and gas guy would. And then, company owned generators all the way into like a self-mining operation there. And, think it provides a lot of benefits. Obviously it's on the bottom end of the cost curve for operating costs to produce Bitcoin, no contracts, no PPAs, just decades of fixed cost power, really, as long as we can, continue to produce the wells, and these gas wells will produce for decades and decades.
So I think you guys are one of the few who are actually vertically integrated, actually owning the oil and gas assets, and then also producing the Bitcoin at the same time. I think that's also the thesis of standard Bitcoin, correct?
Right.
With Tom and Marty, and those guys. But I think you're the first one who've been on the show who actually, Gideon as well, but I don't think he's actually mining on his wells.
No, he's mostly a grid miner.
Yeah,
right,
yeah, exactly.
Yeah. But so on that note,
oil and gas guy.
Yeah,
I'm presuming.
How did you guys get going on that?
Anything but an oil and gas guy. Really, my background is in I studied finance and economics at SMU in Dallas, and then went into starting a SaaS platform for portfolio management companies. So the furthest thing away from oil and gas, we were building products for, private debt hedge funds, and just kind of being a technologist and starting my own company and, being in finance, building financial products, and always kind of been attracted to Bitcoin. So after, we sold that company in 2021, we were looking for a way to kind of make our passion, Bitcoin, a career, and, didn't know if that was going to be, this is the time of like all the craziness and DeFi stuff. Like, I don't know, we're going to build something on Bitcoin or what are we going to do? And just started networking around Austin, met a miner. That really kind of got me looking at Bitcoin mining, and, being a software guy and knowing how hard it is to like launch a product and find product market fit and hit critical mass. And then looking at Bitcoin mining, and my naive self at the time is like, oh, you just plug in a computer and it makes like 90% gross margins. Like, that's crazy. This is when Bitcoin, difficulty was low and Bitcoin was at like 60 grand. And so, knew I wanted to kind of get into Bitcoin mining, do something really in the real world, not sitting behind a desk all the time, and saw everybody flocking to the grid. And, again, at that time, didn't matter if you were paying 7 cents, 8 cents, 9 cents. Really, what just mattered is you're plugging in miners.
Right.
You're splitting hairs on, 80% to 90% gross margin. So it didn't really matter. We kind of wanted to build something that was sustainable in kind of any Bitcoin market. And so we knew that meant, how do we control our own destiny? That's through power and electricity and owning the assets ourselves. And then being in Texas, it's like, okay, what are our options if we want to truly vertically integrate? And it just became obvious that natural gas is abundant. Brought in a partner who like, I know how to operate natural gas assets.
That was going to be my next question is who's operating for you guys if you guys aren't kind of from the oil and gas space?
Yeah. So we operate, like we're the operating company as well as the owner. My partner, Robert Clark, has longtime petroleum engineer, gone to Anadarko and then private equity.
I'm from Anadarko.
Okay.
When was he there?
So Griffin Havey said the same thing. I was like, who is this Robert Clark mysterious figure? He was there, 2006 maybe.
Okay.
He might be listening and being like, I'm not that old for this. I don't quite know. I think he was there for a while, did some stuff in Wyoming, and then
I did stuff in Wyoming. How do I not know this dude?
After we'll pull up the picture and
I need to see a picture of this guy.
Justin is Robert Clark.
Yeah, I know. How do you know?
It's like Satoshi.
Yeah.
So no, I mean, look, I will be the first to admit, like, I'm the dumbest guy in the room across all segments. Like, I cast a wide net. I don't necessarily am super deep. I'm not an expert in oil and gas. I'm not an expert in Bitcoin.
Mile wide, inch deep.
Yeah,
hey,
right. So
journalists run the world.
That's right.
Yeah, like I got the people who are extremely talented and extremely smart in each facet of the business. And I always say the smartest guy at the company is the pumper that we ended up hiring from the company that originally drilled the wells that we ended up purchasing. And like, I've learned more from him than I have anybody. And he's
did you hear that from an oil and gas guy? Because every oil and gas operations engineer I talked to is like, pumper's the smartest dude. You got to always talk to the pumper.
Did
you discover this on your own, Chris?
Completely organic.
Wow.
I don't know oil and gas people hardly.
That's impressive.
So like, you actually dropped a little negative wisdom there that a lot of people don't like realize or maybe appreciate. Is like when you buy oil and gas assets, it's kind of just a common thing that like the pumper just kind of comes along with it.
Yeah.
You know,
you don't want to lose them.
And you don't want to lose them because like they may have worked these, like usually they live locally. They may work for you exclusively, or maybe they're just contracts and they work, for like 5 different operators, pump 20 different wells. Like the pumper that we had up in Tulsa was 82 years old and had been a pumper for like 65 years, dude. Yeah. This guy's hands were just like, he wasn't a big person. He was a small person, but his hands were so weathered from being in the field for 60 years. Like this guy, he just knew anything and everything.
No, just like crushes your hand when he squeezes it.
And like, dude, they're a gold mine of just all this field knowledge.
And they will say that they're a dying breed. Our guy has been pumping these wells since they were drilled in 2005. And, I keep telling him, I was like, we got to get like backup, like single man risk. Like you got to get another pumper. He's like, I just don't trust any of these kids nowadays. Yeah. It's like our generation, Dan, these guys are the hardest working guys. And like, I'm part of the millennial generation where it's like, if I ask someone my age that was pumping wells to get up there at 1 a.m. when the compressor goes down, like they ain't going to do it. He's not answering the phone. Like Dan is, 7 days a week, 52 weeks a year. He's a,
and for the Bitcoiners who are listening, like, what the fuck is a pumper? It's like you're like the caretaker of the well. You're not actually physically pumping anything. I mean, you're like a maintenance guy, right? So like something goes down, the well goes down. They're kind of like your general kind of contractor in a way. Like they'll fix a lot of things themselves, but they'll coordinate usually with electricians and they'll call in your runs for you, make sure you have your loads come in picked up. Like they're kind of like your liaison.
They're almost like the parent to the well, man.
They really are.
The wells that have they're all temperamental. They're like little kids.
Totally.
And they have different things that they consistently have a problem with. And these pumpers learn like, oh man, that's freaking, the Daisy number 5 over there. She always does this. And so they kind of learn how to address the problems as they arise, and they get used to that history of them. It's weird.
It's making me all sentimental, make me want to get back in the operating game.
Right. And so Dan was pumping, I think like 65 wells before we ended up buying the package and brought him on full time. And so you're exactly right. Each well is like its own beast, and they got, their own preferences, and certain things will trigger them. And so having Dan just focus on like our wells, which, we only have 6 up on that particular asset in Fort Worth, has really helped. Uptime for mining, like that's super important. Like LOE, keeping that down, like that's really important. So it's just been like a heaven sent having Dan there. Just couldn't work without those guys.
So I got another question. Without this is the oil and gas lawyer brain of mine, which is not very good. But how do you guys handle the royalty situation on that? Because that is, as an oil and gas attorney, I get asked that all the time.
Right.
Is like, how's this going to impact the royalties? So being fully integrated and being the miner, do you have like separate entities set up, or like how do you handle the royalty situation on this?
So we don't have separate entities set up. It's all under one entity. Subject to change potentially in the future, but each asset's going to have different leases, right? And when we looked at the leases of this asset before we even bought it, we brought in some oil and gas attorneys to look at them because our NRI is 70% in the asset, so 30% of top line revenue we have to pay out to our working interest and royalty owners. And if that's 30% of the Bitcoin mined, like all of a sudden this business model it's completely, the economics are completely different in a really negative way if you have to pay out the Bitcoin. So when we had all those leases reviewed, the attorneys basically came back and said, look, it says, market rate of natural gas. The argument would be made that in the Barnett, like the market rate of natural gas is the price of natural gas, like at the hub that's sold into. And it's like the only way that's going to change for you guys is if like the majority of the market turns into Bitcoin, right? So if every other operator started mining Bitcoin and, maybe someone could interpret the market rate of natural gas changing. So
do you guys go based on consumption for the generators and then use that metric and then just what's like probably $2 an MCF right now? Haven't looked, and then you just pay out the royalty owners that
max
way.
Pain. So like a big distinction is our asset is tied into the pipeline. Like this is not stranded gas. Like that's probably the biggest misconception when people think of 360 mining. It's like, oh, a flare gas miner, these guys are doing stranded. Like
everybody assumes that always.
Yeah, if you think of gas to Bitcoin, you're thinking of a flare. Right? This is completely different. This is like traditional, pipeline connected natural gas, using Bitcoin as a way to optimize the, profitability per molecule. To answer your question, like we actually end up selling gas to the pipeline every month, whether that's any excess that the generators are not consuming or, there might be more profitable like it was in August.
I was going to say, that's the
flip
key.
That switch. Yeah.
That is the key.
So we've been talking about this, and you're the first one who's actually saying, hey, we're actually, Dan at Amalgamated Sludge, we talked about that a little bit in New Mexico, but first person on the podcast kind of talk about having that optionality of, selling to the market.
It's huge.
Or hashing corn. So
right.
How are you doing that? Is there like a pipe with you just fucking?
It truly is like you go back to the pumper, like there's a fork in the pipe.
Yeah.
And there's a valve. And it's like, you want to open it fully to Bitcoin mining? Do you want to open it fully to the sales line? Do you want to do 50-50, 80-20? And like based off of, hash price and based off of, kind of the market rate of natural gas, you can kind of optimize that way.
So on your model then, were you guys kind of looking at it from a standpoint of like, we're going to buy the asset for X, our mining equipment, because it's already, you're not drilling the well, right? You're buying existing production PDP. You buy the PDP gas. Are you doing oil sales as well, or is it just gas?
It's just dry gas. Yeah.
Okay. So you buy the PDP gas, and then you're also factoring your capital expenditure for your mining equipment, right?
Right.
And I guess, you just kind of look at it from the standpoint of what's more profitable that day, right? And that's kind of your guys' model.
Yeah, and there's nuance there with natural gas, which, I'll get into. But yeah, we looked at it like, from the mining lens, this is attractive, right? It's the bottom 5% of the cost curve for production cost, right? It would make sense, right? The energy originates at the well, and the guys, at the end of the supply chain on the grid, it's that molecule's been bought and sold, 5 times. Like from just a price perspective, it's attractive. From a longevity perspective, it's attractive, right? As long as we can produce the wells, like we're not going to get rugged by the, TDSP who's going to change our PPA,
right?
Or the fuel surcharge or any of that stuff. By and large, it's a fixed cost. So, and I think maybe potentially the most important is it's like extremely fast. Like people don't realize that like less than 2% of natural gas that's produced in America is either stranded or flared, which means 98% of it is marketed, right? So you effectively have Zillow and Redfin of oil and gas, where you have eBay of oil and gas, where there's an abundance of these natural gas assets that are ready for purchase, right? And as soon as you can buy it, take over operation, and as soon as you can get generators and miners out there, you can be mining. So yes, the capital outlay to acquire natural gas assets, especially in a high gas price environment, is higher than, dollar for dollar building the same megawatts maybe on the grid. But because you're building out faster, means you're returning cash much faster. And, you get the benefits of decades, so risk adjusted. We just think we think it's really attractive for those reasons.
And it gives you optionality. Like that's the key.
Yes.
To me anyway, that We saw it when we were mining at J too. Is like it having the flexibility of being able to sell gas when profitability tanks like it did.
Right.
I mean, that's huge. It's a huge, difference between you and a lot of the other miners that are out there that are mining off of gas. Is they're beholden strictly to the profitability of Bitcoin mining at the time. And when we don't have a hedge market, that's a really, really risky situation. That's why Flare is like the thing that everybody thinks of, because you can go lock in a rate, but it's also limited because, like you said, there's only 2%. We found that too. We were looking at wells in Wyoming, and I think it was that out of all the flare gas in the state of Wyoming and all the wells that had flared at all in the years that we looked at it, guess how many actually flared more than 200 MCF a day for, I think, 180 days during the year?
I think I've heard you. It was like 1, right?
2.
Yeah.
2. Damn. And that's where people are really kind of missing the point. Like you guys obviously have found that if a well's being drilled, it's probably tied in somewhere.
Right.
It's just like vast majority of the cases, it's how it is. You don't want to drill well if you don't have something to do with the product. So like that's just the reality of it. But that doesn't mean there's not a place for the flare gas miners. Obviously there are, but I think for the industry to grow like it would need to from off-grid natural gas mining, they have to go this route that you're talking about, the fully integrated route.
I think once again, it just shows that there's another business model,
right?
Like for years, we have a whole series that we're going to release on like how to start an oil and gas company. And one of the first things you got to start off with is you got to understand that there's like 7 or 8 different kind of like very popular business models that companies follow. And then there's certain categories, like even within that, of like kind of where you play, right? And so you've talked about assets that change hands, 5 different times. It's because for some of the larger companies, the break even is really a lot higher than some of the smaller companies. And so even within the same business model, you can just kind of pass it down to the smaller companies, and they're able to make more and more margin on those. So how did you guys get started? So you talked about you finding your oil and gas guy, right? And kind of piecing together the team and stuff. And once you guys had this thesis, did you guys go out and raise a bunch of money? Did you just like piece together small assets? Like kind of walk us through like you guys getting started like up until today.
Yeah. So that's good because it'll kind of get back into the optionality stuff, which I definitely want to talk about some more. But really, for better or for worse, I started the company in November of 2021, which the equivalent dollar per MCF of mining Bitcoin at that time was $40 an M. And wonderful time. Gas was $5, right? So
wait, say that one more time so that we can get a clip.
People, yes, actually do.
If you're listening, an oil and gas guy with the non-dedicated, non-hedged gas, even today in a depressed Bitcoin market, $9 an MCF. If you want to realize $9 an MCF, Bitcoin is an option that you can enable in less than 3 months to completely blow out the economics of
the machine matters, depends what miner you're using, but you're right.
I think it was, I don't know if it was Griffin or it was somebody else. Maybe it was Ryan Knuckles over at Mothership. Somebody gave me access to a calculator to calculate what the netback per M was. And at the time when it was like $60,000 Bitcoin, it was right around in power last year. It was like more than 45.
Yeah.
And I was like, Jesus Christ. Once you see that, you can't unsee it.
And then
you know how many people have had tell me though that I'm wrong and that there's
like,
no way.
There's no way.
Yeah.
It's too good to be true.
Yeah.
Truly, you can't unsee it. And it's like catnip. Once you get a taste of it, it's I've never done catnip. I assume if I was a cat, that's kind of what it would be like.
Yeah. I've done things that are like catnip.
I'm not a cat, so
yeah.
Man, that reminds me. This is way off topic, but have you seen? You guys have had to see that video that the lawyer that was in trial over Zoom.
Yeah, and he goes, "I'm not a cat.
I'm not a cat.
I promise,
Your Honor." And it's got the cat filter on. It's freaking hilarious.
Yeah.
You see his eyes like moving down, and like you tell he's nervous. Mouth is moving on the cat. Sorry,
no,
that is literally one of my favorite videos ever. It's hilarious.
All right, so we cut you. So
we started in a pretty, if you look back, hindsight 2020, to start with. At $97 a terahash is what we acquired our first miners at. Gas was at $5, so the acquisition cost of a 400 MCF a day property was substantial.
Yeah.
The point is you put those things together, you build a facility, you get generators, the whole thing. And to put it in context, like the speed, like we closed on the gas asset on November 1st of 2021. and we were mining on Valentine's Day of 2022.
Awesome.
So just the process of going like, we aren't even an oil and gas company, to establishing and bonding and the Railroad Commission, all the stuff, to actually taking down our first asset, to actually using that gas to mine Bitcoin fully vertically integrated in less than 3 months was pretty cool. And we continued to mine Bitcoin through August, right? And here's kind of where the optionality starts coming. This is where it got really cool, is like, okay, well, what happened in August? Well, gas ran up to $9 an M.
Mm-hmm.
Bitcoin, plummeted to, the equivalent of, call it $7 an M. Obviously there's more OpEx in running a Bitcoin mine. So like the profitability, is lower, and the top line revenue is lower at that time. And so we made this decision to say, let's shut off the Bitcoin mine, exclusively sell gas, while other people are, struggling to stay solvent. We were maintaining awesome profitability. And it was at that time that, having this dual commodity thing, having the ability to invest in natural gas and having the ability to invest in Bitcoin is really cool, because at that time, we were actually able to raise another equity round, and we refracked 3 of our wells that were drilled in 2005. So we had a huge, for me, it was like not being an oil and gas guy, it was like a big deal,
big
right?
Learning experience too.
Halliburton and the whole thing, and the sand and pumping the water out of the lake and the right of ways and all that stuff to, stimulate these wells. And we took our little package there, from 400 MCF a day to 2,500 MCF a day.
Nice.
Damn.
So,
I think that qualifies you as an oil and gas guy now.
Yeah,
I think
you are now an oil and gas
You're not an
guy.
imposter anymore. Dude.
Okay.
Like,
Yeah.
I think you're an oil and gas
I've
guy.
met a lot
Most
of
people in this space are LARPers on the mining side.
Yeah.
But you might have been a LARPer. Sorry, he's not anymore.
You're not a LARPer anymore.
Not a LARPer.
I'm honest. I'm in great company here.
You've been knighted, dude.
Yeah,
we
you.
We need, in addition to the tinfoil hats, we need
we need some props.
Yeah, we do.
Yeah, so that was a really cool experience. Obviously, we did not hedge our gas price, so we're feeling that now. But the point was, look, we can increase our gas production at this asset, which is going to be a much more attractive way to get gas than buying net new assets. For a fraction of the cost of buying net new assets, and all the while, like, we're increasing our ability to mine Bitcoin at this site, right? So the total power capacity that's available to us on this particular asset has gone, way up. Now, fast forward another 6 months. Okay, now gas is at $2 an M. Bitcoin has, moved off its lows to about 23,000. So now maybe $9 an M. So now we're mining Bitcoin again. And now the same situation presents itself, which at $2 an M, you have these people who are just gas operators really struggling to break even. You have these higher LOE type gas assets that are cash flow negative, or, and if it's cash flow negative or break even, it's a liability. So what we're seeing now is like a lot of distressed gas assets that are fire sailing, right? So for 360, like, we're able to spend a very, very low amount of dollars to acquire net new assets to kind of replicate this model. And that's only possible because of this dual commodity optionality. Like we say, like, we have 2 monocles, like we have the natural gas monocle and the Bitcoin monocle, and being able to look at a natural gas asset through Bitcoin economics and apply Bitcoin economics to it. Well, that is a totally different economic set that makes taking down these assets viable, right? So if gas is at $2, after you get paid out from the pipeline, you might be making $1.50, but if it costs you, $1.50 to produce the well, it's not viable. But we could take that same $1.50, add $1 to it, so $2.50 to produce it and generate power. And if Bitcoin's making $9, well, that's a great asset right there, right? So I think that's a really cool thing about the model is, it's Bitcoin hedging natural gas, and it's natural gas hedging Bitcoin. And so, you're not all in on Bitcoin, you're not all in on natural gas. And just so happens over the past, 9 months, that hedge is like played out perfectly. Not to say they're uncorrelated, but
when both are extremely volatile and essentially treated as commodities, right? It's like, that's so smart. It's such a good business.
It's funny because natural gas is by far the more volatile commodity over the past 9 months.
Definitely.
Yeah.
Definitely some serious pressure.
14% swing yesterday. I didn't look at it.
Was it yesterday, 14%?
Yeah, like inched up last week and then just plummeted. And it's all like weather predictions. And those weathermen are the least reliable people. I know, like, that has got to be the easiest profession of all time. Those people are just, if they're spouting out whatever they want to say about the weather models.
There's a really good Curb Your Enthusiasm episode about weathermen. Yeah. Because this dude wants a golf course all to himself all the time. So he constantly like screws up the weather forecast on purpose. Keep everybody off the course. You mentioned that you guys didn't hedge on this kind of that last run, which I understand if you're playing that optionality stuff. Do you think though, going forward, you might hedge a portion of that gas if we see prices kind of
absolutely
spike like that?
I'll attribute that to about the 10,000 things we did wrong. When you first start this thing, like you don't know what you don't know.
Stuff, right?
Right. So you look back at it, but the reality is like you don't want to be building Bitcoin mining facilities to 2,500 MCF a day hot off a frac, because that's rapidly depleting. Right. So the whole idea here was like we're going to build to 1,000 MCF a day, and that's where we're going to be like our mining base load gas consumption, and over time that gas is going to fall to that point. Right. So what we probably should have done was hedge out that 1,500 MCF a day that slowly tapers off. So like we could lock in that gas price on the gas that we were going to sell no matter what, because just, it doesn't make sense to, again, like build out facilities for, gas that's not going to be there next month.
Yeah.
So yeah, definitely in hindsight, we should have done that.
Yeah, no, that's cool. I wondered about that because it's almost like you're taking away your optionality if you hedge too much. So are you guys building your own containers, or what are you doing on that side?
No, we're buying containers. We are an immersion miner.
Okay.
So feel free to plug anybody if you like or not.
Yeah.
It's up to you.
Yeah.
Have you tried multiple groups?
We have. And, I'm not here to say what
we're going to put you on the spot, Chris.
Worked or didn't work. I'll tell you, there's a solution we deployed that did not work. That was a big struggle for us.
What color are there?
Yeah, I'm not going to say it online. Sorry, guys. We'll talk about it. I don't want to bash anybody. The point is they made it right. After a long time, we ended up getting 100% of our money back that we were able to redeploy in a new system called Arctic Systems out of Spartanburg, South Carolina. And, one of the few that actually make a turnkey immersion container.
Nice.
That actually works. And so
what kind of miners do you guys run? Because in the last episode we talked, the Luxor guys walked us through Bitmain, What's Miners, and Canaan, and just comparisons.
Yeah,
it was like new to me. So I'm curious if you're like,
we run S19J Pros.
Okay.
It's we see a lot of stuff in What's Miners, like being tanks. We definitely want to, as we continue to grow, we're going to kind of diversify out a little bit and test a couple different models, but. We run the S19s, and there's tons of research on overclocking and underclocking, joules to terahash and efficiency and all that stuff. So, it's part of it, right? It's part of like our whole mission. Well, not our whole mission, but part of the mission is like, how do we maximize the value of a gas molecule? And like, we look at that as like, how does we make a single gas molecule make the most profitability possible? And in some markets, that means, hey, you should overclock it like crazy, overclock the miner like crazy to reach this outsized return. In other markets, it's like actually underclocking the miner can limit your cost, and, produce more profitability at that molecule level.
Okay. Tell us where you're from again. You said it earlier, but I want everybody.
Yeah.
California.
Yeah.
Right?
From Manhattan Beach, California.
Oh, yeah.
So
we talked about Missouri nachos, which are Cool Ranch Doritos and French onion dip.
Oh,
it's the best. I encourage everyone to try those out.
Yeah.
He has a really interesting one that I'm going to get some tonight.
Yeah, well, I hope I don't get put on blast by the California people, because I'm not. This is maybe it's not a California nachos thing. We got pretty good Mexican food there, but this is the instead of Doritos and French onion dip, you go flaming hot Cheetos and cream cheese.
Yeah, that's true.
Have you tried it?
Yeah, I lived in California.
Yeah, you lived in California.
Yeah, there's also another thing in addition to that we had. You were only able to get it on base at Camp Pendleton. I couldn't go out in the city and find it, but you got your taco trucks, right? They're everywhere. Ooh. Everywhere here, they're everywhere in California.
California burrito.
It's just it's different. Yep. But a California burrito, but with the French fries in it.
Yes.
Yeah, with the guacamole and the sour cream.
Carne asada.
The carne asada.
Slaps.
Dude, we had that right outside the PX, dude. I would get one. I'd get I don't know, that 3 times a week. Like that was just like what I ate.
So stationed at Camp Pendleton, were you going to like San Onofre and Trestles and all that?
Everything.
So
all of
shredding
that,
it?
Dude, I was everywhere. I'm a terrible surfer, but I tried.
Yeah.
I tried a lot. And I just stuck to tearing up Palomar Mountain on my motorcycle. That was the one thing I was good at. So I just did a lot of that.
Well, how did you get here?
So I got here. So where I grew up, Manhattan Beach, it's like an awesome little, beach community, but it's also a bubble, right? Like it's just a bubble.
Yeah.
So I knew at the time of graduating college, I was just so sick of like being in this bubble. I wanted to get out. I only applied to out of state schools. And so I ended up going to SMU in Dallas, and then that's where I ended up meeting my wife when we were sophomores at SMU, and got married right after college, and now we have 3 kids, and I'm on the Texas program, and next thing you know, I'm living in Austin, Texas. So yeah, we're
Austin's awesome. I mean,
yeah, we love Austin.
It's great. I love it over there.
You guys in the city, in the outskirts?
We're in the city.
Yeah.
We're about 10 minutes from downtown, pretty close to UT, but it's great. Yeah, 3 little kids, man. It's awesome to have our parents, close by, built-in babysitters.
Oh no, that's wonderful. That's wonderful. What did she say when you were like, "Hey, I'm gonna go get into some Bitcoin mining"? Was it like, awesome, cool, really excited about this, or was it like, what the hell are you talking about?
She was really stoked I was starting another company because between the 2 companies, I went to work for another startup, and like I was miserable. And so she was stoked I was doing that. She's like, "Great, I'm here to support you." What the fuck is Bitcoin?
Yeah.
Like, and oil and gas? Like, what do you know about that, right? So it was, I mean, she's super supportive, but,
that's cool. That's good, man.
She was,
it's a good thing. That's a good thing.
I'm lucky to have her and, good support system around me to, helps a lot.
I brought on the topic of empower and orange pilling people, I brought my dad to Empower last year, and, his entire takeaway was that he just got to hang out with Casey Donahue for 3 hours and drank silver bullets. Did not pay attention to a fucking word of the event, and still just has no concept of like what Bitcoin actually is.
Yeah, no, my family, they just make fun of me all the time. They don't want to talk about it. They don't like, "Dad, okay, Bitcoin. I'm like, okay.
Whatever, guys.
Yeah, whatever.
No, I got the same.
I'm going to remember this when you want me to pay for college. So.
Yeah. I got the same situation. Like, in-laws and my parents, they don't necessarily get it. Yeah. They're like, "I like my dollars. I don't have Venmo. Cash only.
Oh, yeah.
Very digital gold. Bitcoin doesn't mean, what the hell's that?"
Yeah.
So it's been an uphill battle. I resonate with the lack of success, orange pilling family members.
I try like every get together.
It's not for a lack of effort.
If I'm in like a social setting with like outside of this community, and like I go in hard trying to orange pill everybody. And it's usually kind of sometimes you get people who are like intellectually curious, but a lot of times it's just a fool's errand because they're just like, what is this?
Dude, I think the hardest people to convince are your those people close to you.
Right.
It's like, shoot, I mean, I have so much more success talking to people outside that don't know me at all about Bitcoin than I do if I'm talking to anybody that knows me, which is probably an indictment on how people feel about me because they know me actually and they're like, "You're full of shit." But but it's true. I have way better luck talking about people outside of this. But
what is y'all's, getting back to you guys, like what is your, like what's the ambition for you guys? Like, so I thought it was really interesting when we talked to Steve Barber. And he was like, "Listen, like we're not in the game to be just, a mining company or a mining equipment company." He was like, "We want to be, an oil and gas service company first and foremost. And then all the mining stuff that we offer is really just, it's a tool for these oil and gas companies." I thought that was really interesting because I'd never heard him talk about that until he came on the podcast. And so I'm curious for you guys, like, and I've said this to like a billion different companies, so don't take it the wrong way. Like, but what do you want to be when you grow up? Like, what's the ambitions? Like, where do you guys see this going, 3-5 years from now?
Yeah, no, I mean, I think we see Bitcoin as a way for us to own energy assets. It's a way for us to produce energy and make a lot of Bitcoin doing it, right? So I look at 360, like as we continue to grow, like, the ambition here is to not just do, 2,500 MCF a day, but how do we build out this model across much larger assets? And I think, as I look at it, like our goal is to become a major player in US natural gas. And aside from that, like we want to be a light to other companies that are similar to us and prove out that like, dude, like there is a better market for your gas and it's Bitcoin and it's there for the taking and it is here and it is now. And you are leaving, Bitcoin or dollars on the table by not taking advantage of it. Like I've always said that, we firmly believe like the people who produce the power have all the leverage. And it's the people that produce the natural gas that are powering the lights in the studio in here. and it's not the people at the end of the supply chain that are mining the Bitcoin, right? And you guys talk about the midstream and the opportunity in midstream. Like, I just think there's such a massive opportunity for people to mine Bitcoin where energy is abundant, and whether that's at the well, whether that's at the processing or gathering facility, at the power plant level, any of those people can peel off the watts or the MCF and generate a potentially higher dollar per MCF figure. So, for 360, that, for us, that looks like growing, our vertically integrated model. We think natural gas is super important to the US strategically. And, we want to continue to invest and support that industry and continue to, frack for Bitcoin and, grow out that position. But, more broadly, like, we want to like evangelize the energy industry that, like, there is a way for options. There's more options, right? You don't have to be stuck to the single commodity risk. Whether that's natural gas or Bitcoin, like, you can diversify your ability to, make money.
Are you speaking at Empower?
No.
Man, should get them, because I'll
be a sub if anyone backs out. Anyone gets sick. I'm here. I'm on
the
sideline.
I think it's a big deal that people need to understand that. Like, we've talked about this stuff before, and just haven't, like you mentioned too, like we have talked about that, but you guys are actually doing it, because even some of the groups that are out there just trying to do that might not be using stranded or flared gas, they're still doing it. They're only mining Bitcoin, right?
Right.
And because they're probably buying gas from someone.
Mm-hmm.
But this is literally like, and it's same with grid stuff. Like, if you have the ability to have another revenue stream that just gives you the time or the flexibility to make it through a bear market.
Right.
And I talk about this all the time, but the lack of the ability to hedge in Bitcoin is such a significant problem for people staying afloat and making it through these long kind of, crypto winners. I hate the word crypto, but crypto winners.
I would say Gideon's word, but I can't remember how it's.
Thimble Winter, Thimble Winter, yeah.
And by the time the winter arrives, like, it's too late.
It's too late.
And that's the problem.
You're screwed.
Like, I think, and I am the first to admit, like, a naive commodity guy, right? But when the times are good, you think the number just goes up,
right?
Right, and when the
which
tides
we have
turn,
so many reasons to know that that's not true.
Yes.
You know what I mean? But we always fall prey to that. When the thing is, there's going to be another bull market, and people are going to do it all over again,
for sure.
And I've been at conferences where we're speaking, and like, even people that are on the panel, like, well, this is the last bear market we got, or this is, we're not gonna have that. And I'm like, dude, no, we're going to always, that's like you saying that in oil and gas,
right?
There's always going to be a pullback, and there's always going to be a run up. It's the nature of, like, people getting excited about returns that go crazy, and they pour a bunch of capital in it because we get punch drunk and just do stupid stuff. It's just human nature. So I like having flexibility and optionality is such a big deal. And
so here's the third one. Like, so here's the third
another
option.
one.
Yeah. So there's a third one that's not live yet, but it's pretty interesting. So again, not being an oil and gas guy, like, I'm not sure if this is like a universal statement. So full disclosure, judge me hard.
Wait. You are an oil and gas guy.
Yeah,
you're just a new oil and gas guy. I'm new here.
He's one of these self-deprecating guys. Like, oh, shucks, man, I don't know. I get it, Chris. I do it all the time. It's cool.
You should see me in the mirror. So what stinks about selling gas, at least for us, and I don't know if it's the same for oil or all gas assets, but you get paid out on the gas at the average price at the end of the month. So that means if gas is $3, $3, in the middle of the month, it jumps to $10 for 3 days. And we say, okay, we're going to sell gas at $10 for 3 days. And then it comes back down to $3. Like, we're not getting paid out at $10 for the amount of gas we sold during that window. We're just getting, the average price for the month, which might be, $3.25. Like, it doesn't matter if we sell the gas in the front end or the back end. Like, we get the average. So you don't get to take advantage of the swings. So that's where the third market comes in. And, like, credit to the grid guys, like, the whole CLR and, the ability to curtail, like, it's the 15-minute or 5-minute market where, like, it's intervals, and you can monetize in those little intervals where there's spikes, right? So you have that same optionality as a generator at a small scale under 10 megawatts called distributed generation. It's like in ERCOT, you can be 1 to 10 megawatts distributed generator. So like we're currently working to interconnect our power generation to ERCOT, right? So now we can have 3 options, which is, sell gas or generate power. And then if you generate power, well, you can sell that electricity back into the grid, in real time and capture that real time swing.
Well, that is a hedge.
Yeah,
that's a great hedge. Well, and
it's just another option.
Yeah.
Right.
In theory, if you have enough gas, that excess gas you have that you don't build your mine up for. I mean,
has anybody ever done that before? Is that a common thing?
There's midstream groups doing that.
Okay.
Yeah, I don't know any miners, off-grid miners doing distributed generation. But you get the grid guys, right? And then they get the ability. There's all sorts of different curtailment programs, but the most rigorous ones will like net them back like 1.5 to 2 cents a kilowatt hour on their electricity price. And that's how they start claiming, we're 3.5 cents, 4 cents a kilowatt hour. But really, like their nameplate electricity cost is 6 cents, 5.5, 6 cents, right?
Yeah.
So, but it's the CLR and all those rigorous programs they have to curtail like that, that gets them that price. So like the same thing is true in distributed generation. It's like, but our nameplate power cost is, 1.5 cents to produce the wells plus, another cent to 1.5 cents to generate power. So like we're at 3 cents and like we can get that same 1.5 cents to 2 cent rebate from the grid, so we can drive our costs down further while also, capturing the upside in electricity markets. Like we're really excited about that third option too. And like we think like that 3-prong approach, again, going back to like maximizing the value of gas, like that's how you maximize the value of gas. And like gone are the days where you're, in our opinion, like it's only a matter of time until more people wake up to the fact that there is a better market for gas.
Oh, totally.
And
I 100% agree.
And it might not be 100% of the time, but over the last year, it's been nearly 100% of the time.
But when you have that optionality, though, you are able to take advantage of what time is best, and you make it kind of 100% of the time between the 3 options, right?
Right.
And I know of groups that have told me, they're midstream groups, they did a lot of distributed generation like that, where some power back to the grid, paying off their entire project in 3 or 4 days. Like it's super valuable potentially, because like you get these crazy spikes. You get a winter storm come through. You get the crazy heat waves we have sometimes, and
it's the same market that like Riot is curtailing it too. Like Riot made
$70
million
$5 million check,
in 3 days.
It's like, oh shit, okay, I'm gonna sell all my power to the grid then.
That's so nuts.
Yeah,
no, it's super smart. Do you think you guys stay in Texas? I mean, it's a great market for gas. Appalachia's even better. It's the largest gas field that we have in the lower 48, at least.
Right.
So
we'll go where the opportunity is. Yeah. And again, getting back to that 2% versus 98%, like there's so much opportunity in Texas that, for now we're in Texas, but as we continue to grow, I mean, absolutely expand the horizon. I mean, we have all sorts of ideas, like Bitcoin helps oil and gas in so many different ways, and we have aspirations to, be service providers. Like ultimately, I think that's where Bitcoin mining and the oil field's going. Like it's gonna be the Schlumbergers and the pipeline companies.
That's what we were talking about too. I totally agree.
Yeah, it's a tool. Like it's a tool. Whether it's
and it makes
upstream,
total sense for them to be the ones to go do it. It
100%,
really does. Like
100%.
they got the capital, they got the know-how. Like it's compared to what they do on a day-to-day basis, this is nothing.
Simple.
Yeah,
it's the generator companies that are already leasing to these guys.
Yeah.
Like why not just package up like a solution? Like it's a new product, right? And it could be the product that allows you to drill your well 2 months faster before the pipeline gets there. It could be the project, that the solution that lets you go drill for oil in places where you can't flare and there's no way of getting a pipeline. Like you just, you can truck out the oil, you can't truck out the gas. And like, if there's no pipeline, like Bitcoin can be that digital pipeline. Like Bitcoin is the offtake that never leaves the pad. And like, there's so many ways for that to manifest. So I don't know, it's the right industry. We're excited. And, I just think there's a ton of synergies between oil and gas and Bitcoin, and that's why Empower exists.
Yeah.
And we're just excited to be part of the industry.
Yeah, no, I'm excited you are too, man. This is the first time I've ever really talked to you about it, and I couldn't agree more on everything you're saying so far. So I think you're right on point on all that. And how many guys do you have over there at 360 right now?
Yeah, it's small, just 5.
That's good though. It's great. Yeah. So you guys, I mean, it's a startup. That's a lot of stuff going into.
Totally. Yeah. I'm like my title is the CEO, but I like to say like I'm the janitor, I'm the court jester, man. Like whatever needs to be done. We all. That's
I feel like that never ends.
Yeah,
it does. It just stays
whatever
that way
needs to be done.
Well, what is your guys' plan? Jake asked you that, but are you guys wanting to? I mean, obviously, scaling is obviously something everybody's going to want to do. But do you have designs on like, I don't know, going public at some point, or you guys want to get picked off by somebody, or you just want to keep running a business and grow organically? And
I mean,
you're looking for investors,
right? Yeah, we're looking to grow the company, right? And I think eventually exit, whether that's to the public markets or somewhere else. Like the focus now is building this, replicating this model across much larger gas assets. Right. So how do we, be a formidable force in mining from like a exahash perspective, as well as like a gas player? And, I think that could be an attractive acquisition target for an oil and gas company who wants that toolkit, wants that diversification. It could be a miner that, realizes they need to get closer to where energy originates. So like the number one focus is like, hey, let's continue to replicate this model. But beyond that, like, there's a way to help the other 97.999% of operators that own all that gas and help them kind of enable this. Like we see a lot of opportunity being like a service provider, and in traditional oil and gas terms, like, we can build it out for them and manage it and like get a royalty of Bitcoins. Like it's a way for us to grow our hash rate as a company without deploying any capital. Like the thing about these guys is like Bitcoin is not their specialty. It's not easy either. And like we know that now, and neither is oil and gas, right? So I think that's why a lot of people shy away. But if you had the solutions provider that could come in and build it out for you and operate it, and then like we could get a royalty of the hash rate, like that's something we're looking at. So there's a lot of ways to add value, just for us and our model, but like beyond into like the broader oil and gas ecosystem. So that's what we're working on right now.
I'm thinking about like you go to a miner's website and it's like, oh, we've so many exahash, here's how much Bitcoin we've mined over the last year or whatever. You go to an oil and gas company's site and it's like, here's how much oil is produced and here's how much gas is produced. And I'm imagining you guys in the future and it's just like, oh, well, here's how much we're mining, and then here's also how much we're producing in gas. Like it's a really cool.
And then you can like both those two things come together to say $9 an MCF. And
dude, that's so fucking cool. No, you guys are on the cutting edge of like we've talked about this time and time again, of the being vertically integrated and owning the power, owning the energy is a major competitive advantage. And so it's so cool that you guys not only take advantage of the optionality, but also this kind of like third thing of being able to take advantage of the spikes with demand response and almost treat that like as a hedge as well. Like you talked about like how the guys at Riot are doing that. And so I'm super excited for you guys, and I'm super excited to follow this journey. And now I'm kicking myself for not getting you involved in power, because this should be like an entire topic kind of by itself, but there's always next year.
Yeah, I'm in. You know where to find me. And this is only my second time to Houston, so I'm sure
really?
I'll be back. Yeah,
the first time was last year in Power.
That doesn't count because I hardly got out of the car, but I did go to NAPE this year. Oh, okay, that's right. Yeah, that was like my first foray.
The first time you actually did anything in Houston. Yeah. So, Houston's not a bad place, man. There's really good people here. Obviously, the oil and gas kind of hub that it is tremendous, and the overlap with Bitcoin mining, I think, makes it such an ideal spot for obviously a group like you guys that are kind of your dual hats.
We're lucky, lucky to be in Texas, and
I love it, man. I think that I'm excited about you guys. I'm going to do a better job of following you guys.
All right.
So,
well,
I like it. That's good stuff.
Let's do it,
dude. This has been a blast.
Yeah.
So if anybody wants to follow you guys, are you on Twitter?
Yes. Okay. 360 Mining on Twitter. My Twitter's Chris Alfano 360, and that's kind of where all our stuff is. And then our website's 360mining.com. But
Sweet,
I got some pretty poor takes on Twitter. You can see some bad dad jokes over there. So yeah, come on.
I know this takes about 8 times to set up, but I'm so glad we made this happen because this has been so eye-opening.
Yeah. Well, I appreciate you guys.
Really good.
Definitely.
I'm excited, man.
Thanks, man. Well, y'all, if you like the episode, take 2 seconds, share it with your friends, leave us a rating review. Pretty much the entire Bitcoin mining community is listening to the podcast. So thank you guys so much. Thanks to all of our guests. This has been amazing. 1 down, 2 more to go for the day.
Yeah.
Yeah. And thanks, guys.
Thank you.